listening to Buy Now Sell Now. I'm Ankita Saxena, and with me is Kavita Thaplayal. In the next 1 hour, we'll talk about a lot of stocks. In fact, we are in the thick of earnings season, so we'll also talk about the earnings, and the management will be joining us today. So let's talk about the first management. Today on the show, we have the management of Mahindra Holidays. Now remember, they've reported their Q4 numbers. Let's quickly first take a look at the numbers. The revenue is seeing an uptick of 5.3% on a year-on-year basis, though the PAT has seen a decline of a good 43.1% on a year-on-year basis at 42 crores. The margins are also seeing a decline of 220 bips at 24%, and EBITDA is also down 3.5%. On the back of that, Mahindra Holidays is taking a knock in the trading session today. But let's get on board Manoj Bhatt, who's the MD and CEO of Mahindra Holidays and Resorts India, who's now joining us. Mr. Bhatt, hi, good morning. Thank you so much for joining us today. Mr. Bhatt, let's start.
Thank you for being on the show.
Well, let's start by talking about the Q4 financials then. You know, despite the revenue growth that I was talking about, the profitability has taken a knock. In fact, it's declined sharply. What were the key drivers behind the margin compression and the PAT drop?
I think if you look at our business, there's the India business and then there is the European business. So if you look at Q4, what happened was the European business was impacted by the economic conditions and some of the weather related, and this is largely in Finland. And that's what's causing a drop in terms of the number you see. And if you look at the India business, I think that continues to be pretty strong. If you look at EBITDA growth in the India business, is about 8%. If I look at the PAT level, it is about flat, and despite a lower other income. So in a way, I think if I look at India, I think we are seeing strong expansion. Last year we added 900 keys. Last year our overall average sales per unit went up by almost 77%. So while the European business, it's a bit muted because of the economic conditions, and I think that's the reason you see that the console level you're seeing that sharp drop.
All right, Mr. Bhatt. Hi, this is Kavita Thaplayal also joining in, and I just want to focus more slightly on the member additions, where we've seen a decline of almost 46% year on year. Mr. Bhatt, what caused the slowdown? If you could just focus on this and explain us, and how do you plan to revive this growth in new memberships now?
Yeah. So, Kavita, so if you look at it, I think our strategy on member addition, in fact, I've spoken about this in almost consistently everywhere, that we are looking to actually go for focused member addition and also look at the guardrail of average revenue per sale, and that's what we call as AUR. So I think the strategy was that we do lesser member addition while focusing on getting AUR up. And so AUR is up 77%, and you're right, member addition is down. We also introduced a new product called Keystone, which is a new membership plan, which we introduced in December. And that's something which is finding good traction as we continue into F27. So I think from a perspective of the member addition strategy, it is not going to be a mass member addition. It's going to be very focused. But I do expect a 10 to 20% growth in member addition in F27 compared to what we did in F26.
Right. So also talk to us, how do you see the occupancy and the ARR trends evolving just as summer holidays are about to kickstart, and how are the booking trends also shaping up on ground at present?
So if you look at the overall market, I think 2 or 3 things. I think we are seeing that the current trend is that even Q1, our bookings momentum seems to be about the same. We are not seeing any change compared to last year. I think since ours is a different business where there's a lot of kind of capacity which is utilized by members, I think we do expect that that trend will continue. Of course, one of the things we are looking at is the fuel price hikes that might impact air travel. But at this point, I think if we look at the booking patterns, we are not seeing any change at all. In fact, even in Q4, despite all the bad news, I think we didn't see any impact And so that's something which is probably from our perspective. Overall, at an industry perspective, I think we do see that there are certain pockets which might be impacted. But overall, I think the broader industry also seems to be fine at this point.
Mr. Bhatt, also can you provide us an update on the timeline and capex for the greenfield projects in Ganpati Pule and Theog?
So Ganpati Pule, we will open by Q3 this year, which is the October to December quarter. That's what it looks like. I think Theog, probably from a revenue perspective, it will be only in F28 and not in F27. I think the capex roughly, and we will spend, and I'm now aggregating all the projects because we are also starting, we are in redesign stage and design stage and 5 other greenfield projects across the country. So the capex for this year probably will be about 600 crores or so in F27. This is across all the projects.
All right. On that note, sir, thank you so much for taking the time out and joining us and weighing in on the numbers. We'll let you go on that note. But let's talk about another company, another small finance bank, a small finance